Welcome to the video, and today we're going to be talking about Stake and SmartCrowd, two of probably my favourite platforms when it comes to real estate investment, both of which are real estate investment in Dubai. And if you haven't heard of either, you've been either living under a rock or is this the first time you've visited my channel, you lucky things. And if it isn't the first time, then excuse my introduction to both the different platforms. Stake and SmartCrowd, as I mentioned, are both real estate investment platforms. This allows you to invest in real estate in a fractional sense. That means you can buy a fraction of a property. I am not going out to buy an entire property, although you can do that as well. You are often buying incremental pieces or shares of a property, and that's literally how they're broken up too. These platforms allow you to buy shares in a property, and the way that they are constructed is that you buy shares from as little as 50 euros. And both of the platforms work slightly differently in the way that they allow you to buy the shares, how they structure it, what their fees are, what the user interface is like, and generally what the user experience is like too. And I've been using both of these platforms for over a year now and wanted to share my experience in both of those platforms. I would say both the good and the bad, but there aren't really bad points, just some I find slightly better than the other. If they were bad, I wouldn't use them, if that makes sense. So I thought I would present this video to you to give you a better overview of Stake and SmartCrowd, so you can make an informed decision to be able to choose which platform, or do what I do and just use both, because sometimes I find the opportunities on one are better than the other, and sometimes they're better on the other. So if you do both, then it's diversification and technically it's less risk. So that's my excuse for my man math in justifying using both platforms. If you're a complete newbie here and a complete newbie into investing, why would you invest in one of these platforms in the first place? And it's a very good question, but the answer is very simple as well. I don't have the capital to go out and buy a property outright into the world. I just don't have the down payment, and interest rates these days are not very good. And so that means that trying to even leverage borrowed money, which was very easy to do when you had a bit of capital behind you and money was cheap. Money is no longer cheap, so being able to leverage other people's money, it costs you more. So the margin that you have to make that back is obviously increased. So Stake and SmartCrowd allow you to invest in a property from, like I said, as little as $50, which means that you can put your money in and you can own a fraction of a property in Dubai. And that means every month you will get dividends back, which is your rent, paid back to you every month proportional to the amount you invested in there. And when the property is sold at the end, and at the end is whenever they get an offer, it could be, I've seen them anywhere from 24 months to 52 months. So it really depends on when they get their best offer for you as the investors back. You get then the capital appreciation of what the property is worth now compared to when they bought it in the first place. And you're not leveraging any borrowed money either. All of this is done, they sell out a property. So the investors are the people that provide all of that capital to buy that property outright. So there's no money that costs money, if that makes sense. It's just you as investors. Jump on the computer in a minute and show you the different user interfaces and the comparison between the two, because I think this is a good place to start. From an onboarding point of view, I'm going to start there, and I'm not going to go to the computer for this because it's a fairly simple one. The onboarding process for both was really simple. It's not difficult to sign up. You have to provide, obviously, like any regulated financial instrument or company, you have to provide certain KYC, know your customer data. And that means that you have to authenticate who you are, so often with a passport or ID. You have to provide proof of address, and you also have to provide, I think it's your tax information, stuff like that. So you have to provide those things because it's required by law, otherwise they wouldn't be regulated, and that's bad for you and it's more risk. And when it comes to regulation as well, they are both regulated under the Dubai, is it DIFC, so the Dubai International Financial something or other. It's the main financial body in Dubai, so they're all regulated by them. And having spoken to both companies, I know how much of a pain this can be when they're trying to break into different markets or trying to open up things like secondary markets, which we will get onto slightly later. So both of them, from a regulation point of view, comply to these same regulations. Like, there is no different when it comes to that. I think now's a good time to hop on to the computer so you can see the difference in UI, and that's a purely personal experience as well. So you might think, well, actually, I'll prefer this one over that one. It's subjective in that sense, so it's not really going to give you the sense, but if I show you them, then at least you can make that decision yourself and see which one you like. And at the same time, then we can start digging into some of the other parts when it comes to things like returns, my experience with those, lead times, all of the different things that I have experienced in my journey of investing through both of these platforms. This is the SmartCrowd interface, and you can see here when you load up and log in, you're presented with the properties that they have live for investment at that time. And you can see quite clearly it's a very clear interface. It gives you the full breakdown on the ROIs, gross ROIs, net ROIs, yield, rental, etc., and the average return that you are likely to receive. And this bottom one is the one you want to look at. That is the one that you should be getting. But again, it's projected. It completely depends on the appreciation, etc., etc. And the same goes for Stake. They're very similar in terms of their layout when you log in. They have the same available funded exited across each different platform. So there's really no different in there. And you can get to see the same, but theirs is turned up the other way. So you can see the projected net yield, the gross yield, the appreciation, and the annualized return. And the annualized return is the one that you care about, because that's the one that comes back to you in a projected way. And also you can see here that down the side you have your wallet, portfolio, rewards, and cart. And cart is when you're looking to invest, it adds it to the cart, and we'll have a look at doing that in a minute. And we have the same here. So they've recently just changed their UI, so they've made their menu slightly smaller. And one of the, not pet peeves, but the things that I don't think is that clear is that you have to click on this to make it go out, and then you can click on that to make it go back in. But that's just me being fussy. So you can see, again, view investments, dashboard, wallet, my investments, my profile, my documents, refer a friend, share, transfer facility, album support. So they have some more options down the side here than they do on Stake. All the same stuff is available on here, but I think this one is slightly more cluttered in the way it's laid out, but it's marginal. You can see they're very similar. And even when you look at an individual property itself, look, they both have properties in Sobha Heartland, which apparently is a good place to invest at the moment, just FYI. So we'll look at both of these on each individual platform. And then we can start to see the different details that they have about the property. So we'll start with Stake. Stake has the property price, the number of days left, the amount of investors, all of the data they had on the front screen there. And this is where you can choose where to invest, or how much to invest, I should say. And you can see exactly where it is. This is the breakdown as well. Say you're going to invest. Let's see, I know we've got to start on, I'm just going in easy. I'm going with 500. I don't know. I want to dip my toe into this one, so I'm going to go with 500. So then you can see with your 500, based on the projections that they have in here, you will likely to receive, with your base investment of 500 AED, in 5 years' time, that will be worth that amount back, based on these things here. And the property growth is a prediction, like anything. It's always a prediction. The thing that tends to be way more accurate is the rental yield, because the rental yield tells you, they can work that out. They know what the rental prices are, they know what the average occupancy is and things like that. So it gives you all of these different projections of what you'll get back in what time frame. So you can also see here the different fees. So the financials are quite clear here as well. You can see the property cost, transaction cost, their fee, which is 1.5%, and you can see the management and maintenance as well. All of these are baked into the costs. So in the overall raise, this is exactly what the investment cost is, that's baked in. And for the income here, these are things that come off before you get your rent, but that happens every single month. It's all based into the fact they are property managers. So that's all transparent in there. This is the timeline, this is exactly where it is, all the different things, all the different documents that will be associated with that. Now on this one, again, you have the same level of pictures here, everything like that. You have all of your details over this side, and again, you have right here what you are going to invest or what you plan to invest, which is right here. You also have a calculation here, so you can say, I'm going to invest, I'm not investing 2 million, you're crazy. Let's go 500 and see what it comes out. I can't even put in 500. Can I type it in there? Can I type 5? No, I can't. Okay, well, I'm stuck with 800 then. Okay, 800. These again are fixed based on what they think, and so you can see that with an annualized average return of 13, your 800 would return 537 back. So they are laid out in a slightly different way. You can see here that this is where your appreciation and your dividends are. So your dividends would take you to that, and this is your appreciation on top of that. So your total expected return would, from 800 would be 1,137. So you can pick whichever one you think is a nicer layout between the two. This one shows you equally here what your return will be based on rent and appreciation and your capital investment there. So we could even put that one to 800 if we want. No, we can't. We can only put it to 1,000. So these are your projections. They are very similar in the way that they look. Not much difference, right? So then it comes to investing. Say we're going to invest, I'm going to invest 1,000 AED in each. So we're going to go continue on that one. Now, when it comes to buying shares here, this is where I think that it's slightly more confusing for SmartCrowd. Not a lot, just slightly more confusing. So I'm going to say, okay, well, I want to invest 1,000. So then it says I can buy 800 shares. Yeah, okay, but the amount invested is 784. But then the project cost and the transaction cost is there, which means the total cost is 894. But I wanted to buy 1,000. And so for me, this is slightly confusing. I wanted to invest 1,000. It's saying I'm investing 894, but that's because I've bought 800 shares and the shares are 9.98 each, and they've worked out how much the price of the shares are. So instead of just splitting it, it has to be 100%. So then I'd have to go 1,100 maybe. What does that do? That gives me 900 shares. Oh, so there we go. So then my cost is just over 1,000. And so this is slightly more confusing if you just want to invest a certain amount and just do it. So for example, if I'm in stake and I say I want to invest 1,000, add to cart, that's it. I just pay for it, proceed to payment, and I've bought it. So it doesn't go through the same level of clicks and details, but of course those things are all factored in. So it's not like the transaction costs are hidden or anything like that. They've streamlined it so it doesn't affect you when you're looking through it. Does that make sense? I think that makes sense. Now, portfolio and everything like that, they look very similar between the two. Everything is very, very similar. I suppose I could show you my portfolio, but the dashboard is slightly different, see? So this is a bit more cluttered. I do find the interface, even though they've redone it, a bit more cluttered than the stake one. I think that theirs is actually way easier to navigate around. It's very clear. I don't really have anything in my wallet. I've got 56 cents, AED cents or whatever, so that's nice and easy. Portfolio-wise though, go on then, I'll show you my portfolio. I'm pretty open with what I have in there anyway, so it's the value of my portfolio. And you can see exactly what I'm making per month in rental income. So the way I like this one as well is the way it's broken down into key things that help me understand and help me see exactly what I expect per month back from my investment properties. So I have 31 properties, I have a 96% occupancy rate. So obviously sometimes you have where they're not occupied if you have a gap in tenants, etc. And I have my annualized rent. And the reason it drops below my 5 or whatever percent it is sometimes is just where I've invested in new ones that I haven't actually got any rent back from them yet. And I'll go into that process in a minute, because I think that's one of the differences as well between the two different platforms. My total income that I've had so far is 810 AED, and I've had a predicted, because they do what do you call them, surveys of the price of the property, so there's capital appreciation that matches that as well. So you can see already what I haven't, this is unrealized, and it doesn't show me this yet because it is unrealized money, but that is the capital appreciation. And if I go into all of my property and property amounts, you'll be able to see these are my pending ones. So I have a pending investment, I try and do it every month, of this one that I just showed you, and that's my expected rent to get there. And as you can see here, that I've also got no rent for this one and no rent for this one, because I only invested them very recently and they haven't fully closed out yet. So these are the reasons why they haven't yet. But on the rest of them, you can see exactly what my investment amount was and exactly what the capital appreciation was. So you can see this one bed there, that one's got 17.5% capital appreciation already on. So that was a very good buy, because I see here I've got some really good stuff there. So some of these you'll see at the top, they haven't received any rent yet. Like I said, those are the ones that are just finished and they haven't had their tenancy sorted yet. But these ones, a really good one in the elite residence, because this is already up nearly 17%. So when you look at the projections in the beginning, they're fairly conservative with what they say too. And so then if we go back here, what else can we see on here? I'll go into the exit window and what that means too, because both of them have that. In terms of wallet's very simple. You can see what you've paid. You can see as well that you can just simply deposit. Deposit's very easy. If I want to deposit money directly from my card, I can do there. I make sure that I use my Revolut card because it will deposit in AED, and a lot of people complain about this, but it's not really their problem. They can show you what the value is in USD, which is what I often have it as, but you are depositing in AED. So I use Revolut mainly because it's easier and it does the foreign exchange for me. If you're exchanging from a UK bank, UK banks are the worst, US banks are the worst. They will charge you whatever foreign exchange they want, and they're absolute scumbags. So using something like Wise, Revolut, etc., is a way better way of doing it. I'll put my code is realtalk.business/Revolut. Even if you just set up your Revolut just to use for here, you don't need to even order a physical card. You can use a virtual card for it, and you can top up your Revolut with your current US, UK, whatever bank card, so with no fees. So one of the things that I do is I use my French bank card to top up my Revolut, and then use my Revolut to use this, and I just get a better foreign exchange and it saves me a ton of money. So why wouldn't I do that? It's way better. So let's go into on this one and what it looks like when you do that. So it says now if I try and complete, it says I don't have that amount, so I have to complete my investment, which makes me then go through adding money to my wallet. So it's slightly different in this way when it comes to investing on the SmartCrowd platform. It makes me top up my wallet before I do the investment, whereas with Stake, it allows me to pay directly there, and then again the user journey and the customer flow is just a lot more smooth. So it's a bit more of a jump around for the SmartCrowd paying. But when it comes to my dashboard, this is my dashboard, so it's called a dashboard instead of my portfolio. I can see here the different breakdown between long-term rental and holiday. I can see my total rent to date, but you'll notice my rent to date is actually fairly low compared to that. I only have 7 investments here. I obviously have smaller amount in my SmartCrowd, but you can see the amount of rent I have received for each month. There is less detail remaining here, or detail to show you here, so I can see what I've done, but it doesn't go into the same level of detail per property. I get property updates, so all of these I can see property updates are here, which is fairly useful. I don't mind those. But one of the things I would say around the total rent I've received per date, I've noticed it takes longer from the end of a sale, so once the investment is finished, before I then get issued with my share certificates and then start receiving rent. I appreciate that obviously they have to make sure that they do all the transfer into the SPV, which is a special purpose vehicle, issue the shares and do all the share issuing. But with SmartCrowd, it has taken a lot longer for me to receive any rent back from invested properties than it did on Stake. I do receive my rent pretty quickly, and they are, on the whole, quicker to turn around at the end of an investment period. That's my experience. It may not be the same for everyone, and it might be different from mine, but my personal experience is I have seen more slow lead times on the SmartCrowd platform for you to start accumulating your rent back to you after investments. However, there's a caveat to that, and that's the exited properties. SmartCrowd have been around for longer than Stake. They are a more mature company, and this means you can see here the number of exited properties compared to Stake. They have one. Stake sold this one last year, and that's because they got a very good, I can go into the details of that, I can tell you. They got a very good return on this one. It was worth selling at the time, it made sense. But at the same time, they are a new company. I say new, they've been around for 2 years, I think now, or just over 2 years. No, I started investing when they were fairly young, which was just over a year ago. So they haven't been around long, so probably less than 2 years. Whereas with SmartCrowd, they have been around for a lot longer. And if you look at the exited prices and the time, I just covered in a video the exits from SmartCrowd, and you can see a whole heap of them here. So the total ROI, that was in 31 months, so that's about 12.5% per year, something like that. Again, you look at this one, that's over 2 years, but not by much. And so look, that's nearly 30%. So when you look at these and their returns, they are getting some absolutely cracking returns on their properties. And this is why I like to use both platforms, because I prefer the user interface and the customer experience of Stake, but I appreciate that they're new as well, and way newer and younger as a company than SmartCrowd. SmartCrowd might be more clunky as a user interface to use, and they may be slower in getting rent to me in the first place, but I know that they have a track record of some really good returns. So when you look at all of those different things, that makes a big impact for me as an investor. Now, they also have what's called secondary market. So people often say to me, what happens if you want to sell your shares before they find a buyer or get a decent offer from someone to liquidate and sell the property? Because that's obviously what they need to do to be able to sell the property. They have to have a decent offer. They're not going to sell the property unless they have a decent offer, because that's not in the best interests for the company or for investors. But sometimes money is money, and you're like, well, with shares on the stock market, I can just sell them when I need the money, even if I'm selling at a loss. But with property, it's harder to do, especially if you're in a shared property purchase with other people. So this is why there is a secondary market. But the reason why the secondary market is only open twice a year, which it is, it's open I think in May and then in November. I think it opens again next week or tomorrow. It opens soon. It's open around, it's around soon. It depends when this video goes out as well, so it's probably open right now. Who knows? But check out on their websites. They're both open around the same period of time per year, so they have the similarities in that too. And what that enables you to do is sell them on to other investors. So you can sell them, you can say, well, I'm actually going to charge 5% more because that's what I want back. Or you can say, I'm happy to sell them for what I paid for them because I've got my rental dividends back and I need to liquidate. And it depends how much you need the money. So, it really does depend on what you want from that. And if you have the liquidation, or if there is the liquidity on the market, which means that people need to be able to buy, you only can sell when people are buying. So that's the thing with the secondary market. If you leave secondary market open the entire year and there isn't the liquidity for it, people don't like that. So they only open the secondary market twice a year. One reason is because they don't want to have it open the entire year for liquidity purposes, and two, it tries to target the best times to buy and sell shares as well. So there are these same reasons why they both target the same different times of the year, because they're a good time to open these markets from a market point of view. So like I said, they're very similar in terms of experience I've had with them. There is a slightly longer lead time I've experienced in getting rental dividends back from my investments with SmartCrowd. I do find the user interface slightly more clunky, especially when it comes to purchasing of shares. that just, for me, it's slightly less intuitive. So I have to work out what the bottom number is going to be. So if I'm trying to invest 1,000, then I'm like, I'll have to put in some more to try and get it to that point at the end, because the fees and the calculation is a bit more jumbled up, like I mentioned. And the same with the experience in adding money to pay for an investment too. Ideally have it in your wallet first, but if you don't have it in your wallet, or if you have some in your wallet because you've got it from your rental dividends and you want to reinvest those, then you have to add more. That is slightly clunkier. It's a clunkier experience, I'm not going to lie. But their returns are good. Like, I look at the exits that they've had a ton. I think 14 exits, and they've all been very good. So their track record is very good. But their product for me isn't quite as polished as Stake's. And Stake are newer, have a more polished product, a more polished user experience. All of even the portfolio running through that, it gives me way more confidence because I can see even the current appreciation on some of them. So for that, well, I can see it on all of them, but on some of them you're like, wow, that's amazing. So for that, I prefer that experience. And this is why I use both, because for me it's important to have that diversification. I like both products. I think that the offering they give you and the return they give you is great. It's something that I don't have the capital for putting into a huge property, but at the same time, especially with the markets like this, like I said, money isn't cheap anymore. And it takes a hell of a lot of time and effort to find properties that are actually decent. They do all that, both platforms do that for you. So it takes any of that work, effort, everything out of the equation, which makes things so much more easy. So even if I did have the money, would I just do it anyway? Just because, yeah, I probably would do that too. So I find them very valuable, both of them. I tried to give you as much of an insight as possible. If I've missed anything that you guys would like to see or hear about, drop me a comment what you'd like to see on both of these, and I can follow up in a Q&A, or I can follow up in the comments or whatever. You can always join my Discord as well. It's realtalk.business/Discord. I'm going to put it like here again, like there, that's my Discord. Like, is that it? And again, if you want to sign up to any of these platforms, you probably have already, and if you haven't, then you can use realtalk.business/Stake or realtalk.business/SmartCrowd. And on both of them, they both offer the same thing. If you sign up with my link, you get a free 250 AED for signing up, which I believe is, depending on the current exchange rate, I can't be guaranteed to be right, but it's like $68 or something. So that means that your first investment, if you invest 500 AED, which is $140, something like that, it's only actually costing you $68, something like that. So bargain, like half price first investment, if you use one of my links. Hope you've enjoyed this breakdown. I'm trying to be as thorough as possible on the things that I think matter to me. They may not be the things that matter to you. It's not financial advice on what you want to do, but I'm trying to share my experiences with you and give you the best experience you can when it comes to investing, and you're investing with the knowledge in your head that I try and get myself. Thanks very much for watching the video. Hope you enjoyed it. Don't forget to share the video, like, subscribe, do all the things that you're supposed to do on these things. And yeah, stay tuned for the next one. Peace.